Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, September 19th, 4:57 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, weak uptrend as defined by the O'Neill follow-through day that we had on August 29th. We're 15 days into that, not making any progress. In fact, we undercut and reclaimed the bottom of the range today, the bottom of that follow-through day on the NASDAQ 100 and S&P 500. Very often, undercut and reclaim of prior ranges can put in a bottom, but we've got a big what if happening tomorrow with the FOMC interest rate decision, and see what they have in their statement, and then see what Powell says at his press conference. So a binary event, and very likely to increase volatility in the markets. So checking the trend gauge over here, first of all, leaders neutral, not making much progress. And then looking at the 5 major indexes across 3 time frames, the health of these dictate how much capital we put at risk in the market for clients. Short-term neutral, we've got mid and small, well below their 21-day moving average. Dow, NASDAQ 100, and S&P below their 21, but holding the bottom of the range, and the slope of the line is flat. I've talked about that several times over the last week, about how the flat slope of the line really doesn't serve as a support or resistance level, but more like a net that price can go back and forth above and below. And when those aren't serving their purpose, you look to a individual support area, and that's what we're doing by looking at this recent trading range that we've been in for 15 days. So same rating for the medium-term 50-day moving average of 21 and the 50, very close to each other, especially on the S&P and the NASDAQ 100. Long-term, small caps tried to get back above, but failed at the long-term moving average today. All other indexes are above their 200-day. Mid caps bounced off the 200-day, so that's a pretty good sign if your glass is half full. So what happened today? As I said, 15-day range, undercut and reclaim of the recent range by the major 2 indexes, and we've got Jerome Powell tomorrow. Here are the final numbers. They're all red, but honestly, they're the headline is in yellow, which is perceived as neutral, and the reason for that is we were down quite a bit more on the S&P and the NASDAQ, all of the indexes actually, and then rallied in the afternoon on that undercut and reclaim level. Final numbers, RG8, this is our 8 growth ETF composite, down 0.5%. S&P 500 gap down 0.2. At the low, it was down 0.8, rallied during the afternoon to close down 0.2. Same thing with the NASDAQ 100, down 0.2. Dow down 0.3. Mid caps down 0.2. Russell 2000 small caps down 0.4. Global Diversified 60/40 stock and bond down 0.2. In-house GROTECTION down 0.08%. Actually, this was a 9, 0.09%. Approximately a little bit of alpha by our biggest holding today, Uber, which was up 2.3% on an undercut and reclaim of the 21-day moving average and bouncing at the 50-day moving average. We'll take a look at that chart when we get to the chart section. Let's get right into it, and we'll start with the S&P 500. You can see closing in the upper range of the bar, today's bar, and there you see the gap down, rally right into 44.50. 44.50 is now kind of a resistance level that we need to look at, as we tried 3 times during today to get above it, and we're unable to after failing there over the last 2 sessions. So we definitely, although we've talked about the other range that we had, this 44.50 has to be factored in as of a couple days ago and with the action today. So there's the undercut and reclaim that I talked about on that 44.30 level. And very often undercut and reclaim puts in a low, because anybody that was eyeing this follow through day low and the low of September 7th, where we tested that, sometimes that just, you undercut there, the last of the sellers get washed out. And when there's no more sellers, then buying commences, and you can see the 3 big 30-minute bars of buying up to the 44.50 level and a kind of a cup base into the close. So add 44.50 into another key level. You can also watch this downtrend line and 44.90 also within there. It's where we failed to get above several times around 911, 912. Got back above it when we did the trend line break. And what looked like to be a bullish event was undone the next day, and the last 2 days continuing to the downside. But if you're we got to watch this to see if this 44.30 level, if that was a shakeout. And then, of course, the big binary event tomorrow with the FOMC. Let's move on to the NASDAQ 100. Same situation on a 30-minute chart. This actually did not undercut, came close to it. The equal level to 44.30 is this 369 level. But if you look at the NASDAQ 100, or not the NASDAQ 100, the NASDAQ composite, this is actually weaker. I really don't focus on the NASDAQ composite because the futures are based on the NASDAQ 100 and the QQQ is based on the NASDAQ 100. So it doesn't make a whole lot of sense to me to look at an entire index. It'd be like if we put a lot of stock in what was going on in the entire NYSE, and I mean, we just don't. It's looked at for the overall volume, but uh, either way, we did undercut and fail to reclaim the bottom of that low on the NASDAQ 100, but we're focused, or on the NASDAQ composite, but we're focused on the NASDAQ 100. You can see 21 to 50 tight along with the 8. It's going to be up to the reaction tomorrow to the Fed, and then obviously Thursday and Friday after the overnight digestion of whatever he says. There's 99% chance of no rate increase tomorrow, but about between a 35 and 40% chance of another rate increase by the end of the year. Let's go to the Dow Jones Industrial Average. Relative strength over the last 2 weeks. The follow-through day actually put in the bottom on the Dow, and we haven't gotten close to that. So that is reflected in the increased relative strength that we're seeing, but still below the 21, below the 50, and above the 200-day moving average. Let's go to mid caps. You can see the bounce at the 200-day moving average. Just kind of playing around in a very tight range here over the last 3 days, and IWM small caps hurt by oils and banks today. Tried to get back above the 200-day moving average, but ended up making a lower low and closing right at the low of this range. So arguably it undercut this 181.61 and closed slightly above it. So not a lot of power though if this was an undercut and reclaim the way the bar was set up for the NASDAQ 100 and the S&P, where we closed very close to the highs of the day. Let's go to the VIX. The VIX, and this is bullish, up. Let's go to a 5-minute chart on the VIX, up early and climbing as the market sold off and then reversed in line with the opposite of what the market's doing. These uh, move in opposite directions, and it bounced off that 50-day moving average and got back under the declining 21-day moving average and that 15 level. We want to stay above there. And this is, you take the number, divide it by 16, and that should give you an approximate daily range of the volatility for the S&P 500. And it's been pretty close, as we're under 8% on the ATR, the average true range of the S&P 500. That's the distance from the high to the low, or the trading range in percentage basis every day. Let's move on to the dollar. Didn't get any help from the dollar today as it was up tight range, but just bouncing off of the 8 EMA. How did this correspond to the precious metals? These have an inverse correlation. Gold basically just down 0.1% on the day. GDX, which we've got our eye on, but failed again at this in the high 20s level, which corresponds to the 50-day moving average. Maybe just time for a little bit of a pullback here, though, at this resistance level. Bulls want to see something like this, a little move down and then a move higher, breaking out above this. We almost certainly are going to need help from the dollar, but the fact that gold, GDX and gold are not at their lows while the dollar is at its highs is a positive divergence from a gold standpoint. So that's why we've got our eye on that, as these normally move opposite each other, but not making lower lows on gold and gold stocks while the dollar is making a higher high. SLV, third of the triumvirate of precious metals, at the declining 21-day moving average. Let's flip over to bonds. No help from bonds today. Bonds pulled back, broad bond index down 0.2%, the long bond TLT down 0.74%, TYX, the 30-year bond, not quite new closing highs, but up 0.73. I read that the TNX, that this was a 16-year closing high on it. That's not what you want to see, but it's what you're getting. On rates, very quickly, Bitcoin, which we passed up slightly on the day, back above the 21-day moving average. All right, that's the inter-asset correlation. Let's get to the tail of the tape. You can pause this. Stochastics stretched negative. At some point, they'll snap back in the other direction. Sometimes that can give you a clue. You just can't have everybody on one side of the boat. And we've got certainly a lack of bullishness. The AAII survey has nailed the top and the bottom, the top this year and the bottom last year. These aren't at extreme ratings, but they're also not at a negatively extreme reading, which is counterintuitively positive. Operating under the bear case, with this being below the 21-day moving average, but still holding that range. Day count, 15-day consolidation, third day under the 80 EMA, third day under the 21 EMA for the S&P 500. Let's see, not a lot of standouts in sector land today. We kind of traded in a tight range. Solars were very strong early and faded. Oils strong and faded, and we got stopped on our NRGU position. Semiconductors weak. So what would we do in house today? Had our eye on Lilly. It pulled back, bounced to 21, and gave us the 60-minute stochastic cross buy signal. So we bought a starter position in that. We had 10% T-bills expiring today, so we put that money back into T-bills at durations 3 weeks out and a month and a half out. And as I said, stopped on NRGU. Take a look at a couple of other interesting charts here, and we'll also go over the 4 that I ended. Remember, we ended last week with 17 stocks in the 21 over 21, and I neglected to mention the 4 that were added today or over the weekend. But the bottom line for the day, follow through day consolidation is in day 15. Undercut and reclaim at range support. That's a positive for the S&P 500. Got to wait and see what the FOMC brings us tomorrow. So let's start out with the 4 stocks in the 21 over 21 that we added. Array, a solar stock. One of the reasons we've been holding off on adding this is because it really didn't have a sister stock that was in any way positive, but NXT is forming a cup and handle here. It's not the best cup and handle, obviously, but at least we've got another stock with nice fundamental numbers. They make money, and their growth rate is not outrageous versus their PE. In fact, it's pretty good. So that's number 1 that we added. We also added AEHR. They got a new client. These do semiconductor equipment testing. Reclaim the 21 over 21, also forming a cup and handle. ESTC, a nice gap up on earnings out of this double bottom base, and pulling back right to the top of that range, showing a nice consolidation pattern. We're looking for things that are, holding up, so that when the market rights itself, we can get back in. And the fourth one was Dell, another one with a gap up and just going sideways since the gap. Let's take a look at some things that did not do so well today. ELF, Ikes. We've been talking for a while how this needed a base. Look at this beautiful weekly chart on this. This is something um, for a model book. One pullback to the 20-week moving average, continuing bounces at the 10-week. Now back to the 20-week again. Maybe time for a base on this finally. But definite selling, 78% above average volume, down 8.5% on the day. Clear violation of the 50-day moving average and filling the gap from earnings. Not good there. Also not good. 2121 member app. Nice day yesterday, attempting to a breakout. What happens when stocks try to break out in a market with headwinds? They fail. Down 9.7% today. Nutanix, NTNX, also 2121. Strong stock on its earnings, made a higher high within a week after that, just selling last 3 days above average, undercutting, closing just below the 21 EMA. Again, strength not getting rewarded. Let's go to the portfolio now. We had some relative strength in the portfolio today. VRT held up very well. So this is 2 undercut and reclaims of the 21, and it bounced there again today. Up positive, light up on the day, 0.7% on a down day, but very light volume. Lilly is what we added to the portfolio. Pulled back to the 21, nice 3-day pullback, bounced there, and had a 60-minute stochastic cross today. So we bought it right at 575 today, a starter position there. Tesla showed some relative strength today, up most of the day, hanging right at its 8-day EMA, holding above the 21. Nvidia was weak for most of the day, closed mid-range, but a nice inside day after the hammer yesterday, which is looking like a shakeout for now, but we need some more strength to get it back above its 50 and 21-day moving average. Uber, great day today, up 2.3%. Undercut reclaimed the 21, bounced right at near this 10-week slash 50-day moving average. Volume just slightly below average. Good action by Uber. It's forming a nice cup and handle. Anything that you're seeing that's forming a nice cup and handle while the market is correcting, this is textbook action during a market correction. And what you'll see if we get some strength to the follow through day is these fundamentally sound, high relative strength, healthy stocks breaking out of bases. We're seeing several bases form. We're a week and a half from the end of September, the weakest month of the year, going into the healthiest portion of the year, which is the fourth quarter. And the setup is there. We just need some cooperation from the market to trigger these stocks to the upside and out of the bases that they're forming. TBT, this is very clearly a fly in the ointment on that because this is rising interest rates. And I mentioned how the 10-year closed at 16-year highs. That's not doing growth investors any favor, but we're waiting for this to resolve. NRGU, oil stocks pulling back, outside negative reversal, worst looking candle that we've seen in a while for this. I said I've been using the 8 EMA after doing some offensive selling last week. Break below the 8, we got out of that this afternoon. So we've got no oils other than what's in SSO right now. This could pull back right to the 500 or the 21, but our plan was on a break of the 8 would be a change in character over the last 3 weeks for what it's been acting in. We also saw leading stocks like Weatherford pull back on above average volume today. We saw outside negative reversals all over the place in the oil patch today. So let's just say that. And that's everything that we own, and that's all the charts that we wanted to go through, which means it's time to wrap up the video. As always, like to hear from you. You can leave your comments on YouTube. We'd appreciate it if you would subscribe and like the videos. If you don't like it, make a comment and tell us what you don't like about it, and we answer all the comments. or you can reach me, Don at revereasset.com, if you're just interested in becoming a client. My partner, Dan Stewart, Dan at revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. Remember, it's not how much you make in the markets, it's how much of that you can keep. We're kind of battling back and forth between should we be making, should we be keeping? And with this being under the 50 and the 21-day moving average, our target ceiling for beta is 1.0. We're at 0.93, right below there. But we're ready. We've got some setups there. We just need the market to cooperate so we can put some more money to work and get, we want the wind to shift from being in our face to at our back, because it's not how much you make in the markets, it's how much of that you can keep. And with that, I will wrap up today's video for Tuesday, September 19th. This is Don Vandenbord with Revere Asset Management. Just the facts in these videos. If you think something we're saying is contrary to what's actually going on, we're always up for healthy debate. Thanks for listening and have a great day.